Good afternoon, everyone. I am C. Krishna Mathur, Chairman of Bharuch Branch of Western Region of ICI and moderator of this webinar. We are delighted to welcome you all in the webinar being organized by Continuing Professional Education Committee of ICI under the able leadership and guidance of Chairman Sir C.A. Purushottam Khandelwal ji and Vice Chairman Sir C.A. Gyanchandra Mishra ji. It is my pleasure to be a moderator for the webinar on inspection, search, and seizure in GST and Audit Trail under Companies Act. In a short while, we will start this webinar. First, I would like to apprise you about the CPE committee. In today's ever-changing professional scenario worldwide, the biggest challenges the professionals face is how to stay on the top of their game while adapting to the new requirements and norms. Therefore, it is imperative to aim to be up to date to offer unique guidance, influence others with their innovative approach and expertise. It is also vital to stretch old ideas beyond traditional boundaries to create new perspectives. In this context, CPE facilitates professionals to maintain, improve, and broaden their knowledge, skills, and expertise required to achieve their professional goals through these webinars, seminars, etc. The program for this evening shall be as follows. We have two sessions of 1 hour each, and topics are inspection search seizure in GST by CA Navjot Singh sir, audit trail by CA Nitesh Kumar More sir. Our eminent speakers will talk about these above mentioned two emerging areas of professional interest. Before starting our technical sessions, I would like to introduce our chairman sir to the attendees. C.A. Purushottam Khandelwal sir is chairman of CPE committee and also convener of RBA Directorate of ICI. He is having 25 years of post-qualification experience in the field of audit, direct and indirect tax, and intellectual property rights. This year, he has devoted his time to fortifying the CPE framework and guaranteeing quality across its entire operational spectrum. And this year, major focus would be on upgrading of CPE portal for enhancement of the branding and professional competencies of members. I invite sir to give his welcome address for this session.
Good afternoon, respected faculty of the webinar, past chairman of the EIRC, and my dear friend Nitesh Moreji, technical faculty Navjot Singh ji, who's from Noida, moderator and the chairman of Bharuch branch of Gujarat, Krishna Mathur ji, secretary of the CPE committee Ajitna Tiwari ji, and respected member who are watching live program organized by the CPE committee. It may immense pleasure to be amongst you that my committee is dedicated to organize a quality program for the upgradation and a latest knowledge for the members. The today's topic, which is taken by Nitesh More, is very relevant, important for all the members, and Navjot Singh is taking is a very, very important and hot topic. So I would not take much of the time because the members is here and Nitesh has a use long periods to take the sessions. So we have to shortcut your period for 1 hour, 2 hours to 1 hour. So you have to be crispy. Sometimes the people say if you have to speak for the 15 minutes, he has to prepare for 2 days. If you have to speak for the 2 hours, there is no need to preparation. So how to crispy and what is the very important has to be given to the members. So this year ICI is celebrating the 75th year of the inception, and we invited the quality speaker for that. And another, we have created one committee at a central level, AI in ICI. So this is a very, very important committee. My president, Ranjit Agrawal ji, is a techno-savvy, and he want to bring a technology at ICI. So how the members can adopt and use the technology. So AI for the member is that if the member wants to file an appeal for GST or an income tax or a ROC petition file, you can give your inputs to the computer chat GPT. They will prepare one purely appeal for you with the all case law, section, and citation. Even though human intervention is important, but the most of the time which you have to expense for the drafting of the appeals and all these things will be taken care by technology. If for the AI for the student means the students, those who want to know how what is the trend of examinations, what kind of question asked by the examination, what is the relevant question, which topic you want to read just now. So he not to turn the many pages, but he can click of the mouse, he can desire his result, desired topic he can find. So AI is a very important topic. Another, this year my committee is dedicated for the technology. We are coming out with a one dashboard where all the program across the India will be listed on the same portals, and you can register yourself from the same portals and pay fee at the same time. So if you want to attend a program of income tax, you can register for income tax. You want to for GST or ROC, you can choice of your professional relevance. So you have not to sub the 175 branch program. And another, we are bringing with the attendance sheet. So majority of the people and branches are facing serious consequences that member is coming, signing the attendance sheet, and they have to upload. But now we are coming planning with that when the British board is giving a speech in the auditorium, we will display code in the auditorium. So this code, and we will send link to the participant, and the participant will go and feed the code, and your real-time CPA will be updated. So this is my target. I will not take much of your time because all you are here to hear the faculty, not to me. So thank you so much. Please take session careful. Krishna Mathurji, you take session forward. Thank you so much.
Thank you, sir. I would like to apprise the panelists that today we have over 1,000 of attendees attending this seminar. So moving to our first technical session on inspection, search and seizure in GST. I would like to introduce CA Navjot Singh sir to our today's attendees. He has more than 10 years of experience in indirect tax and international tax advisory and litigation. He has been assisting foreign national and companies in fulfilling their tax compliance obligations in India. He has also been providing robust representation and strategic counsel in legal proceeding, resolving disputes efficiently. Sir, I request you to take the session forward.
Thank you, Krishna, for the introduction. Thank you, Purushottam ji and Gyan ji and other respected members of CPE committee for providing me the opportunity to speak on the most relevant topic of GST. Because as we are standing after, like, I would say, almost 6 years of GST, where we are today, are we like, have we, I would say, grown up well with the GST, or where is the litigation as of now? So today's topic brings you, I would say, the present update that what GST is up to. As we started with GST in India, as we know that GST is with the perspective of self-assessment. There is a specific section in GST law which says that whatever the tax is liable to be paid, you will self-assess and you will pay. Section 59, which is a clear section and which casts upon the responsibility on the taxable person who will see that whether he is liable to pay tax or not. So that is a self-assessment. So whether any tax paid as per the self-assessment is the final assessment, or whether the government has also power to cross verify the details provided by you through filing the necessary returns. So of course there will be revenues turn also. Revenue has all the powers to do the scrutiny. They can send you the notices for the scrutiny. They can send you the show cause notice if they feel that you have paid the less tax. And at last, they have this particular section, section 67, that is a section of inspection or search and seizure. I would say this is one of the harsh section that they can invoke, and they can come to your premise or any place where you from where you conduct business, and they can verify the details as prescribed in the particular section. So what is this section for? Like, this section is only for the fraudulent people, the people who are doing fraud. As you must have heard that in GST, a lot of fake invoice rackets are being caught by DGGI. Anti-evasion is also actively framing the people who are, indulged into malpractices. or is it for like the normal industry player also? As you have heard that there are certain other issues also in which inspection or search may be conducted. I'll give an example. So we can categorize two sort of categories. One is like who are or the government think that they are indulged in fake invoices or maybe other malpractices, and there is another category, or there might be some industrial disputes between the government and the industry. Industry might be facing or might be following a certain way of doing certain transactions, paying taxes as per their understanding, but the revenue thinks that industry should not follow that. The I would say the new, or I would say recent example is of ENA, that many of the liquor companies feel like there should be a levy of GST on ENA. Though council have also said that in its meeting that there should be a tax liability on ENA, but many liquor companies are not paying. So many inspections, or I would say raids, happened, and they were compelled to pay the ENA, the tax on the ENA. Then there is the industry of gaming. As we have seen that this particular industry have gone through a major overhaul, and a higher side of liability or a higher side of tax rate has been given to this particular industry. And after that, I think almost every company, every gaming company uh, met with inspection. Then there might be insurance, tobacco, banking. So the industry in which the government think that there might be anomalies which a whole industry is facing, so they can opt for this particular section. Mostly you have seen that the officials from DGGI, that's the GST intelligence unit, or maybe preventive wing of GST and anti-evasion, that we commonly heard. These kind of authorities are commonly involved in doing this or invoking the particular section's power. Now, this section is kind of a basis of adjudication only. And this section empowers officers to visit my premise and see that whether I am doing any sort of practice, or if they are having any information that I might be doing something wrong. So let's begin with one important right, or one important Latin term that we should be following, that which is on your screen, which means that the law aids the vigilant, not those who sleep over their rights. That means whatever the rights law has given to us, we must follow them, or we must be aware of our legal rights, and we must follow them. A legal process or legal rights are only for those who are actively knowing, or I would say who are actively known to their rights. It's not for who are ignorant. There is no place for ignorance in the law. You cannot say that I didn't know, that's why I didn't pay the GST. So that's something which cannot be condoned. Third important aspect is that as per the Limitation Act, the law provides certain time limitations also. So if you don't file your suit, if you don't file your claim within the time, and any claim if you file after the expiry of that limitation period, it will be automatically invalid. So this particular term you should know, because as I mentioned that this particular section is quite harsh in nature, and you must know your rights, what you are going to do. So we are going to cover broadly four sections, with section starting with the section 6, which provides the authorization of officers of state tax. Since we are following the Central GST Act, we are referring to the Central GST Act. So we must know that whether state officers are authorized to take actions as per CGST Act or not. Then section 71 is there, which empowers officers to access to business premises, and certain other powers which are given in section 71. Then the main section, section 67, which is for inspection, search, and seizure. Then section 70, power to summon persons to give evidence and produce documents. So let's start with section 6. What does section 6 says? So if any proceedings, see, when GST law came into picture, as we know that previously there were two kind of laws. One was the state law, which got, I would say, indulged into a single law of GST. One was VAT, and one is excise or service tax. After the GST came into pictures through a order, what the CBIC did, they divided the uh, SSCs between two of the authorities. So one category is being handled by state authorities who were VAT officers previously. Briefly, we can refer them as SGST officers, and one is the CGST officers, the officers who were handling service tax or the excise law previously. Now, the important question which come into picture is whether all these authorities, like who are empowered to function as per CGST Act, and the authorities who are empowered to do functions as per SGST Act, can there be a cross empowerment? Whether I am a assessee and my jurisdictional officer is CGST, and can the SGST officer can also issue me a show cause notice? Is this possible? So Section 6 basically empowers this kind of cross empowerment, and it says that SGST officers are proper officers, or they can be authorized to be a proper officers as per CGST Act. That means they can issue you a show cause notice if you have not paid tax, and if a SGST officer has observed, and if he feels like he can issue to you a notice also as per CGST Act also. Now, any proper officer who issues order under CGST, any officer like SGST or CGST, any officer, if he is issuing any order under this act, he must issue an order under SGST Act also, and he will intimate it to you, your SGST jurisdiction. If you have seen the GST portal of yours, or any of the client of yours, you must have seen there are two jurisdictions. One is CGST jurisdiction, or I would say your administrative jurisdiction, and another one is SGST jurisdiction. So two of the jurisdiction are there for every SSC. But one of them is the administrative jurisdiction, who is the proper officer for you. But the other jurisdiction of SGST might have the cross empowerment on you. And if he is issuing any order, or if CGST officer is issuing any order, he must issue an order under SGST Act also, and he will intimate it to your jurisdictional officer of state tax. Now, where a proper officer under the SGST or UTGST has initiated any proceedings on a subject matter, so suppose if any subject matter which is being initiated by a proper officer, then the another jurisdiction cannot initiate the same proceedings on the same matter on which already another jurisdiction is. There must be a there is cross empowerment is allowed, but not on a same subject matter. It should not be like that multiple authorities are running after you only on the same subject matter. That is not allowed. After that, any proceedings for rectification, appeal, and revision, wherever applicable, of any order passed by officer appointed under this act shall not lie before any officer appointed under SGST. Suppose any order is passed by CGST, you cannot file appeal before the appellate authority of SGST, of the state jurisdiction. You cannot do that. Vice versa, like any order passed by SGST, you cannot file an appeal before CGST officer. So that's how it is there. Now, recently we have seen a very important judgment in this respect in this particular section 6, which say in the judgment of TVL Vardhan Infrastructure by Madras High Court, which says that cross empowerment, there is no notification per se, because section 6 specifically states that there will be a notification which will lay down the conditions through which cross empowerment will be enacted. But till now there is no notification, so that's why any action done through cross empowerment is lack of jurisdiction, and all the notices or orders passed in that particular writ were quashed by Madras High Court. So it's quite a relevant judgment. But yes, before we speak of inspection, that who can inspect my premises, so this was a relevant section to be begin with. Next important section is access to business premise. Like who has the power to visit your premise, or who will be given access to your business premise. So an officer under this act, any officer who is authorized proper officer under this act, if he takes permission from joint commissioner, he can come and access to your business premise. To do what? To inspect books of account, documents, computers, software, or other relevant items. That other relevant items may be any sort of document, and he can come and verify all these things. Basically, this particular section is relevant to conduct audits, scrutiny, verification, and check necessary to protect revenue interests. So this is a basic section. This is not inspection. This is basically any officer is coming to your premise, and he will be given access to all these documents which are laid down in this particular section. This particular section is mostly used in inspection, and I would say when the department is conducting audit as per section 65. What are those documents which you should provide him with? One may be prepared or maintained records, whatever you are maintaining records in Tele or maybe any software per se. you will be, I would say, the person will be authorized to check that. If the data is in electric form, he is authorized to check that. Second, trial balance or its equivalent. If you have maintained a trial balance or any, I would say, statement which is equivalent to the nature of trial balance, so he can verify that. Then statement of annual financial statement, duly audited, your audited financial statements. Then the cost audit report, your income tax audit report, or any other relevant record. Now they have given that residual clause of any other relevant record. That means they can verify any sort of document related to your financials, and he can even ask you to prepare GST or 1 3B reconciliation, your data of import, your e-way bills, your 2A 3B reconciliations, your sales reconciliations. So it's better if you get all these reconciliations ready at a certain interval, so that if any authority is coming to access your business premise, and if he's coming to premise to do inspection or any sort of activity, maybe audit, so you're ready with all the reconciliations. Then let's come to the main section, section 67, subsection 1. Before we read out the particular section, it is very relevant to see that CRPC provisions are applicable to this section. There is a specific subsection, section 67, subsection 10, which says that provision of Code of Criminal Procedure 1973 related to search and seizure shall, so far as may be, apply to search and seizure under this section. So there is a separate act or separate code for criminal procedure, which also laid down provisions related to search and seizure, which are commonly applicable to all the laws. So this particular section says that all the relevant points related to search and seizure of that CRPC will be applicable to this section. What might be those particular section? One is section 93, which is related to search warrant. There must be a search warrant. Then section 165 of CRPC, which is very important, that state down the, I would say, the regulations when search must be necessary for investigation. See, search is a very invasive in nature. It's kind of a, I would say, you Article 21 of Constitutions give the equality to everyone, and all these all these sections of inspection are in a nature in which your personal space is being invaded. So these section must be, I would say, if any officer is opting for this section, he must obtain necessary information before coming to a premise. That's what the law also says. But in general, through CRPC also, it is connected to give it more importance. Then section 100, which says that to ensure fair and search, presence of two respectable witness obligation should be there. Now let's come to the main part of section 61 1. It is divided in two parts. Now when we heard of inspection, so second question will be, what can be inspected? This section says that proper officer may authorize any officer of central tax in writing in form of GST INS 01. That's the authorization which his senior official is of any rank of joint commissioner or additional commissioner is giving to him to inspect any place of business of taxable person, transporter, or warehouse, or any other place. So, what is relevant here is that one part state the responsibility of on the tax officer to inspect the premise of taxable person. We are not speaking of a registered person. He might be registered in GST, he might not be registered in GST. By taxable means, he is, I would say, there was some responsibility from that person to pay taxes, and there is a tax liability due from that person that this officer is has reason to believe. When a professor not below the rank of joint commissioner has reason to believe that a taxable person, now there are four categories of I would say the condition when he will see that whether there is a reason to believe present or not. That when officer think that the taxable person has suppressed any transaction related to supply of goods or services. That means we started with section 59 of self-assessment. That means you have not done the proper self-assessment. You have not shown the proper supplies. then has suppressed the stock of goods in hand, that you must be having some stock which you have not accounted for, which you have not shown in your books that you have bought. Then you have claimed the excess input tax credit. Then you are indulged in contravention of any provision of this act. So first three conditions are quite, I would say, apparent that these are the violation that must be there. But the fourth one is kind of in a residual nature, which says that if you are indulged in any contravention of any provision of this act or rules made thereunder to evade tax under this act. Basically, if you are contravening any sort of provision, if you are not issuing e-bills and government think that you might be evading tax through this particular procedure, so they might come to inspect your premise. But still, I would say before exercising this section, the officer must take permission from Joint Commissioner in Form INS 1. Then he may come to your place of business, even if you're registered or not, and you must have done any of these contraventions. So coming to the next point, circular. There was a circular issued which says that who are those officers who can authorize to give powers to these officers. That can be additional or joint commissioner. Then very relevant point, that is place of business. What is place of business, which is given, the definition which is given in the law, which says that a place from where the business is ordinarily carried on and includes a warehouse, a godown, or any place from where taxable person stores his goods, supplies or receive goods or services or both. So it includes all sort of places from where you are doing business, from that taxable person is doing business. It might be his headquarter, it might be his branch, his warehouse, godown, or any other place where he's storing goods, supplies. Then it might be a place where a taxable person maintains his books of account, and a place where a taxable person is engaged in business through agent. If any office is there where your agent sits, that is also covered under the definition of place of business. Now, last, and as discussed, that whether that place should be registered or not, it is not liable to be registered. So even if they can come on a unregistered premise also, because place of business has nothing to do with the registered place of business, as we show in our GST registration. Then very important part is it's the section only covers the inspection of business, place of business. It doesn't empower the officer to record your statement. If he's coming to your premise, he will simply come and check the documents. If he finds that you have done something wrong, if he finds that search is to be conducted, he must take prior authorization and he will do the search. But at the end, if he has not issued you section 70 summon specifically, only if he has taken the permission of section 67, then he cannot take the statement because it is not provided in this particular section. Now section now there is, as I mentioned, that a proper a word which is given very carefully in the section, so that not every proper officer is taking undue advantage of this particular section, that is reason to believe. Now, that reason to believe is something which is not specifically provided in GST law, but we must take the judicial precedent's help to understand what is reason to believe. Now, as per section 26 of IPC, Indian Penal Code, which says that reason to believe is as having sufficient cause to believe something. There is a sufficient cause to believe anything, any information with the officer. Now, there is a very important judgment of Punjab High Court in HL Civil versus CIT, which specifically and in detail explains what is reason to believe. It is basically a fact used to justify or condemn an act. And when facts or information support an argument, if you have any sort of information that I have provided certain goods to any supplier based out anywhere, and I have done that supply without issuance of invoice, or maybe I just have issued invoices and not supplied the goods, and if he is having a proper facts to support that, then that might be considered as reason to believe. Now, why reason to believe is important? Because, as I mentioned, this is a procedure to adjudication. This is a procedure to adjudicate whether you are liable to pay tax or not, whether you have done any contravention of law or not. So if reason to believe are properly recorded by the officer, so at a later stage, if the matter goes to high court or any judicial uh, uh, body per se, So then that officer will be able to prove himself that yes, I had reasons why I came to your premise. So that's why these reason to believe should be logical, should be having some belief. There are other judgments also which provides I would say the importance that why reason to believe should be there or what should be there. Now there is an important judgment of Gujarat High Court which says that you must be having a proper authorization to conduct research, because as I mentioned, it's a fundamental right guaranteed under Article 21 of Constitution of India. And if a personal liberty is being invaded through this section without any authority, and High Court comes very heavy on officers, and they say that there should be a proper guideline, there should be a proper way through which this particular section should be exercised. So this judgment is quite relevant of coming from Gujarat High Court. Then there is another judgment of Telangana High Court, which says that there cannot be violence while exercising this particular section. You can conduct the investigation, you can conduct the interrogation, but it should be with I would say, utmost dignity, and there is no place for violence when doing the inspection. And then court held that any interrogation of petitioner or their employee shall lie between 10:30 a.m. to 5 p.m. on weekdays. So there is, as such, there is no time limit prescribed in the law on the particular section itself. But just seeing the circumstances, court may provide these kind of directions to the officers. Now, first part was for the taxable person who is himself indulged in these kind of practices. Second part is for transporter or storage service provider. Now, when proper officer, not below the rank of joint commissioner, has reason to believe that a transporter or storage service provider is keeping goods that have escaped payment of tax, and has kept his accounts or goods in such manner as likely to cause evasion of tax payable under this act. That means first part of the section 61, first part is related to taxable person. Second part is applicable on the transporter or the storage goods provider who might be carrying those goods on which tax has not been paid. So these particular officer can inspect the premise of that particular transporter or storage service provider as well, who has kept those particular goods on which tax has been avoided. Now, if we summarize the sections, so there are two parts of section 61, subsection 1. Part A says speaks of taxable person, speaks of transporter or service provider. So, in both the parts, the authorization from JC or the higher official, joint commissioner or the higher official is required to be obtained to inspect any premise of taxable person or all these persons. And then there is a there was a word of any other place. What do we mean by any other place? Like there is a place of business for taxable person and transporter and service provider. Then there is a any other place. Any other place might include your residence also. That's why we heard in GST that the residence of any person who was indulged in malpractice is also being uh, inspected. So the residence is covered through that any other place phrase which is used. Then inspection is, I would say, less invasive than search. Search and inspection both are separate terms. Now, what is search? Suppose any inspection was conducted. Both sections are interconnected. Any, I would say, authorization was taken from joint commissioner that officer is having reason to believe that this person has evaded tax, and they went to the premise and they thought that this person might have evaded maybe 10 crore or 5 crore of tax. But when they reached to the premise, they saw that some sort of suspicious document or some sort of suspicious business activity is going on, and they thought that this person is not showing the, I would say, particulars of these particular business not properly in GST returns. This they came to know only when they conducted inspection. Then the extra part of search come into picture. That is covered in the section 67 subsection 2. Before we read about search, let's read the meaning of search. Search means, and if like there is as there is no particular definition given in the GST law, but if we take the dictionary meaning, it says that An inspection of man's house or other building or premise or his person with a view to discovery of contraband or illicit or stolen property or some evidence of guilt to be used in prosecution of criminal action. That means search is with the mindset that you are finding something. Inspection was conducted when you had reason to believe that person was indulged in those four categories. But in search, you are pretty much sure that you did not found proper document or proper evidence through inspection. That's why you are required to conduct search. You are required to go a step ahead, and you required to do the search. Now, what does the section say? Section says that when a proper officer not below the rank of JC has a reason to believe any goods liable to confiscation or any documents or books or things which in his opinion shall be useful for or relevant to any proceeding under this act are secreted in any place, he may authorize in writing any other officer of central tax to search and seize or maybe himself search and seize such goods, documents or books or things. When, as I mentioned, in inspection, you got to know some sort of evasion, some sort of big evasion is happening, and you think that all those relevant documents, books are secreted in that particular place where you inspected the premise. Then you think that I might need to go a step ahead and I might need to search and seize those books of accounts to verify the details. Then you take the permission from joint commissioner and you go ahead with the search. Now, what things can be searched? This is also important. Aforesaid goods, the goods on which you think that the person might not have paid the tax, the documents might be related to the financials, related to which the evidence which shows that the person have evaded the tax. All the accounts, register and documents of the person produced before proper officer. If the proper officer has reason to believe that such person has evaded or it is attempting to evade tax, any I would say document which is evidencing that person is indulged in some sort of malpractice. In this one important judgment, because the word says secreted, when after inspection you felt that the officer felt that something is being secreted from me, if everything is available to him, then inspection is enough, there is no need to do the search. But if he feels that something is secreted, something is hidden, so that means he need to go one step ahead and he need to break almira, or he need to break doors, or he need to create a havoc there. There is a judgment of Supreme Court which says that secreted means document which are not kept in normal or usual place. That officer, if there is a almirah which is there is a lock, if there is a door which is there is a lock, so that means something is if is it something is hidden in that particular room, and the taxable person is not giving us any key to that door. So that means I have to take permission from Joint Commissioner to conduct the search. Search, when we say search, it comes with certain more powers than inspection. So it might be any document and anything or any it might be a CCTV recording also, that comes under the definition of thing. So it might be anything. Now, important point here comes in respect with cash, that whether cash is a thing or not. If the officer went there and they found cash in a huge number, so what to do? Like, can they seize that cash or not, or is it come under the definition of thing? So there are divergent views of High Court. Some of them says that it doesn't cover under the definition of goods. Some of them say that it is relevant to do the proceeding, so it comes under the definition of thing, because the definition of thing is very much exhaustive, and it involves everything, almost everything. So they can seize the cash. Now, the important part of search is the detention of goods. If it is not practicable to seize, suppose if I found a diary and I just kept it as an evidence, but there might be some of the machines, or maybe there might be a big chunk of documents which I am not able to carry it at the time of search. So if I am not able to seize, so I may give an order of, I would say, detention, that these goods or these particular machines you will not use, and I will give this order under in INS 03. Then practicable means when you are not practically able to do the Seizure, that you're not able to practically do that. So this particular judgment of Punjab Haryana High Court says that when it is impracticable, when you do the detention. There are other judgments also which says that, which speaks of impracticability during the judgment, that it is not, I would say, unlimited power with the officer, that he can put detention on everything. Suppose if I am doing 100% conducting my business, and out of that 30% is illicit, and that 70% is a routine business which I'm doing, so officer cannot come and put a restriction that I cannot use my machine from tomorrow. So there might be some sort of uh, I would say prudence before that, and there might be some sort of impracticability which shows that, why this detention is important. Then only detention can be there. So when that officer is taking away all these documents or things, is there a time limit that's till when he can keep all these documents? So whatever the documents, books, or things which he has seized or retained, if he feel that out of those particular seized goods, or maybe seized documents, some of them are not, I would say, useful to him, so he can return those documents or goods within the 30 days. And if he has, like for the other goods, if he has not issued any sort of show cause notice or maybe order to you, like after, as I said, that it's a part of adjudication. So certainly after coming to your premise, taking away documents, he will analyze, and he will see that whether you have evaded any tax, and after making those that assessment of tax, he'll be sharing a proper notice to you. And if he has not done that within 6 months, that these 6 months can be extended further 6 months. So within 1 year, if he has not issued any notice or order to you, so then he must be returning goods to you after that. Then 637(4), it gives the power, as I mentioned, in search comes with certain more powers. They have authority to seal or break open any sort of gate, almirah, or maybe if they feel that something is hidden behind the wall, so they can break it. So all these electronic devices on which lock is there, so they are authorized to do everything, almost everything related to opening up certain things, to unearth all the relevant information. The same power has been given in CRPC also, section 47(2), which says that if any entry into premise is obtained, the officer carrying out the search may break uh, or open outer inner door also, or window also, of any house or place on which the search is being conducted. Now, sealing of premises, is it proper? As I mentioned, that if officer is putting seal on the complete factory for like 2 days, 3 days, that we'll do the search until then the whole premise is being sealed. So that is not allowed. In one of the judgment in Delhi High Court, in Napin Impex, says that uh, section 69(4), which I would say authorizes the concerned official to search the premises, and if any resistance is offered, then only they can put the seal, or they can break open, or all these things that they can do, but they cannot put the complete sealing on the premise. And that sealing, if they do, like for 2-3 hours, if the resistance was there, so they put the sealing on the whole premises, that sealing cannot be indefinite. There must be some, I would say, they can say that for 4 hours you cannot use this machine. That is totally understandable. But if they say that for 4 days you are not allowed to come into the premise, that's something which they cannot do. Then another important aspect is that whether you are entitled to take photocopies of seized documents. If they have taken away the goods, goods we understand, but if they have taken the important documents of your business, so are you entitled to take photocopies or extracts? So yes, certainly you can take the uh, photocopies, but you will have to take a prior authorization, and that officer may restrict also photocopying if he thinks that you might use it, or it might be prejudicial to their revenue. So then he can particularly deny that. Then even within that period, like of 30 days or 6 months, Can I provisionally release my goods? Yes, you can. If you execute a bond and furnish security and payment of tax, interest, and penalty, if you do before 6 months or before 30 days per se, then you can get your goods released. That proper procedure is given or laid down in section in rule 141. Now, when my goods are being detained, so can I go to high court and file a normal writ saying that my goods should be released, and since I'm being sent or something like that? So, answer to this particular question is was given by Supreme Court in one of the judgment of State of Uttar Pradesh versus Cape and Fragrance Private Limited, in which what High Court did was that assessee whose goods were detained, that assessee did not exercise the powers laid down in the section that we just read, section 67(6). He did not give the bond, he did not give the security, he did not pay the tax, and High Court ordered that without adhering to the particular this section, the goods are being released without furnishing of, uh, I would say, bank guarantee. So court said that the Supreme Court said that without adhering to the principles which are laid down in the law, the High Court cannot interfere in the releasing of the goods. So the stay was given on the High Court order. So after that, there were multiple judgments in which High Court, I would say, refrained themselves from giving any sort of interim relief in terms of providing any sort of uh, uh, relief in terms of releasing the goods on provisional basis. So High Court cannot interfere at that stage unless if officer has done something. I would say done something which has violated the natural justice, or he has been unfair to you. That is unexceptional circumstances. Then disposal of seized articles. There is a power under section 67(8)(9), in which if any item is of perishable nature, hazardous nature, or if there is a depreciation over time, there is a space constraint is there, or there might be other relevant consideration, then the officer may dispose of the seized goods. The next important aspect of this is section 70. So in section 67, we read off the important powers given for inspection of your premise and for doing the search. So for inspection, as I mentioned, there are four categories for doing the search. When they came to a premise, they inspected, but they found that something might be concealed, something might be hidden, something might be secreted. Then they can force upon the search. They can break doors. They can break upon all the almira, or maybe any place where they might that relevant information or documents might be hidden. So that is a search. Now, this important aspect of summon, this is related to taking proper, I would say, evidence or taking statement. Now, Section 70 of CGST Act empowers officers to summon any person for evidence or documents or any other item in an inquiry. Similar provision were in Central Excise Act. I'll tell you a very, I would say, crisp difference between this particular law and the previous law. Previous law used the word for purpose of this act. That means summons were used or summons were sent out to take evidence or documents related to any inquiry for the purpose of that act. Basically, if anything is related to Central Excise Act, then only the summon can be issued. But in GST, this particular phrase is missing. That means the summon says that if any inquiry is being conducted, okay, if any inquiry is conducted, so then only then the officer can issue you the summon, so that the inquiry and the scope of inquiry is broad. So sometime in today's time, if you have heard or if you have seen that there were a lot of fraud in cryptocurrency, related to cryptocurrency companies, or maybe the gaming companies also, who were taking funds or transferring the funds to Gulf countries. In those particular transactions, uh, the power through this section was invoked and many information or material was collected. So for the purpose of this act is missing in GST. That means it increases the scope, or that scope of inquiry is broad now. Then there is a judgment of GK Trading Company related to word inquiry, which says that a specific purpose should be there for issuing any summon. If there is no inquiry, then there cannot be any summon. And when we speak of inquiry, it means initiation of inquiry and conclusion of any inquiry. You should not get it confused with the proceedings. Proceedings means there should not be, it is not necessary that whether any proceedings under this section has been initiated. It is not important that whether you are served with show cause notice, you are served with any scrutiny notice, then only a summon can be to you, sent to you. It is not like that. Summon can be sent to any person related to any inquiry. Only inquiry. You just forget the word proceedings when you read the summon section. So just like search and seizure, CRPC was applicable, but in respect with summon, the provision of civil procedure is applicable. Now, if we see the section 2732, which speaks of mode of service of summon, and it gives the civil court power to the officer who is issuing to the summon. So GST department can basically compel you to come and give the statement. So there are consequences for not following the summon, as they have powers and as per CPC also. So there can be a arrest warrant be issued against you if you do not follow the summon proceedings. And but later on you can I would say get a bail, or maybe get yourself immune power can be there if you provide the evidence that why you were not available, and the reason was excusable. And in GST there is a particular penalty of 25,000 as per section 122 subsection 3, which says that if you fail to appear or produce any document, so there is a penalty of that particular amount will be there. Now there is a specific instruction which was issued by CBSE in 2022, which said that why a summon is why the issuance of summon is important. It is, as I mentioned, there should be an inquiry, and it is very much important to call that person for giving the information. If the information is readily available through access of portal, so then the summon sending the summon is not I would say the ideal scenario. Same stance has been taken by in three of the judgments which I have mentioned, by Gujarat High Court and by Guwahati or by Delhi High Court, which says that if the officer feels that assessee is having certain information with him, then only he should call him through summon. If he feels that that same information I can get through any means, so he should not bother the assessee. Then the important aspect of like as we professionals must have seen that if someone has been issued to a client, so can you appear on behalf of the client? So someone is a person specific proceeding. If someone is being issued to any person, so that as per law that person is required to be presented. Now if any officer per se is giving you liberty to appear on himself, that is totally upon the liberty of officer. But practically advocates or consultants are not authorized to be a part of the said proceedings in which any statement is being taken. Same stance has been taken by the Supreme Court in Pool Pandi versus Superintendent of Central Excise, which says that it would be unfair on the part of officer when any advocate or maybe any consultant is a part of proceedings in which officer is trying to make some statement from a client. So if that atmosphere is not in the favor of revenue, so it would not be fair on a revenue part. So that's why the presence is completely denied. So summing up my session with the miscellaneous points which are relevant. See, suppose if we have seen practically that during inspection and search, these officers compel us to pay, and through coercive measures, they make forcefully debit entries in our cash ledgers through DRC 03. So whether that is allowed or not. So as per law and as per many high court judgments, it is not allowed, because DRC 03 is supposed to be voluntarily in nature, and this cannot be forcefully made. So when the GST department saw that there are a lot of high court judgments, so they came up with instruction also, which says that recovery under section 79 can only be made when there is a determination of tax, when there is the issuance of show cause notice, there is a confirmation on demand, then only there can be a recovery. So it that particular instructions says that if any officer is troubling you and making you they are forcing you to pay the amount, so you can certainly uh, file a complaint against those officers for misconduct, and strict disciplinary action will be taken. And that particular instruction again emphasized on the part that DRC 03 is voluntary in nature and cannot be used for tax recovery enforcement. There were another guidelines also which said that it should be done by competent authority. There must be a search warrant. There must be a female officer. A proper decorum should be maintained while the search. There should be witnesses also who shall accompany, and the timing of search should be suitable for female and elderly women or maybe children. And if there is no need to be the part of family members to be in that particular, since I mentioned that inspection can be done at any other place, so that any other place might be your residence. So and if there is no requirement of your family to be part of that particular proceedings, so they cannot made them, I would say, wait, or they cannot compel them to be the part of particular proceedings. So search should be person specific. If I am the officer and I'm having a certain information related to Mr. X, so I must conduct the search on Mr. X only. I should not conduct a search on Mr. Y and Z who are remotely related to X, unless I am having reason to believe equally for Y and Z. So search should be person specific. It should not be a very vague in nature. If you feel like there are 10 people involved, you must have information related to 10 people. So the same stand has been taken in the judgment by Supreme Court. Then, as I mentioned, that act of officers towards family members. So, in this particular judgment of Gujarat High Court, which says that Section 67 is a person-specific section, and only the person on whom you think that who might have evaded the tax might be the party of the particular inspection and search, and they cannot compel the family members to be part of that adjudication process. And you know they can leave, or maybe they might be given liberty to leave. Then the important part is in respect with admissibility of material taken during the illegal search. Suppose if a search was conducted, inspection was conducted, and if at a later stage it was found that officer was not carrying the proper authorization, and you went to High Court, and the High Court held that this particular search is illegal, or this particular inspection is illegal. So whether any document or anything which was seized during the search is admissible as valid material. So many High Court and Supreme Court have said that even the search was illegal, but if any document is being collected during that illegal search, and if it is found that through that material that you have done something wrong, so that material becomes valid material to initiate adjudication. So even though in illegal search, the officer might collect some information from you, and then at a later stage he might use that information to initiate any sort of adjudication against you. So this is also very relevant to see. So that's all from my side. I hope that I uh, was able to give you a brief of section 67 and the allied sections in respect with inspection and search. I hope you
Thank,
find it useful.
thank you, sir. I think if you are comfortable, let's take a few questions that I have received. So you are on mute.
Please, Krishna.
Yeah. One of our professional colleagues has asked that can search be conducted without carrying out inspection first?
As per, if we see the section that like search can be conducted without inspection, so practically it will be very difficult that if officer is carrying out any search without inspection, because JC because without going to their premise, how will you come to know that if anything is secreted or not? You will come to know only once you visit their premise. If you inspect their premise, then only you will come to know that this particular information which I had and which I thought that this person might have is secreted. Then only the search can be there.
Uh, time of inspection, notings had been made based on some documents provided by the taxpayer, but the taxpayer later realizes mistakes in those underlying documents. Now, what recourse is available to that taxpayer to withdraw or correct such submission at the time of notings?
Uh, he can provide I would say additional submission, or he can make himself appear before the officer that whatever the details he has given, he can rectify always that and search or seizure. The environment is certainly bit heated up, and there might be a chance of mistake during that period of time. So yes, you can always rectify yourself at a later stage.
Another question is more on a jurisdiction side of basis, that can two officers from central proceed on two different issues of the taxpayer? Would it make any difference if topics are still different but presided by central and state authorities separately?
Yes, they can do it. In fact, you must have seen that in gaming companies, mostly the proceedings were initiated by DGGI, and all the, I would say, past tax demands are being, the show cause notices are being issued by DGGI authorities and subsequently taken by central tax authorities only. Because if you see, when DGGI conduct any search or inspection, after that they issue a show cause notice, and then they direct the central jurisdiction of that assessee, whose administrative office is of SGST. So that SGST office cannot take up the same matter on which DGGI is deciding. But yes, SGST authority can take up some separate matter, and this particular matter taken through DGGI or maybe anti-evasion can subside. So both the matters they can do, but on a separate subject matter.
Yeah, I think these were three questions for our session. Uh, thank you, sir, for patiently delivering the lecture, patiently answering the questions. On behalf of CP committee, I would like to offer a formal vote of thanks for sharing knowledge from your vast experience in your professional field. I am sure our attendees must have benefited out of your session.
Thank you.
Uh,
Thank you, Krishna.
Also, I would like to apprise that during our course of session, the attendance have reached more than 1,500.
Oh,
Uh,
that's
yeah,
wonderful.
yeah. So moving to
Excellent.
our next session, we have our second technical session for the evening on audit trail. I would like to introduce CA Nitesh Kumar More sir to our gathering. CA Nitesh Kumar More sir is no doubt a well-known personality in the Eastern, even on the national level, because he has acted as past chairman of EIRC in 2021. He has experience in chartered accountancy profession and as well as insolvency profession. He has taken so many initiatives such as employment initiative, women empowerment, etc. He has also delivered more than 150 sessions on corporate laws, bank audits, code of conduct, and IBC laws across various platforms. With this brief yet very strong introduction, I welcome Nitesh sir to the session and request him to take this forward.
Thank you, Mr. Krishna, for the warm welcome. My co-speaker, Mr. Singh, the Secretary CP Committee, the Chairman, Vice Chairman. Uh, Thank you all for having me today and inviting me to share my view on the very pertinent topic, that is the audit trail. Friends, if you ask the audit trail, first of all, let me ask you why the provisions of audit trail, the government thought that we must have the provision of audit trail. Friends, maybe the next year, after the end of the financial year, some of your small clients, they are coming with the bank statements and maybe your some books of accounts, and maybe in June, July, August, and that books, then the audit starts. And in case of very small company, there may be a 2-3 cases you may come across that they do come with in the past they were coming with the bank statements even. So then the things starts for small companies, small and medium sized companies, maybe small companies. So such a scenario in India, there are large number of small and medium companies are also there. This provision, the audit trail provision, that has been implemented first time in India only. So India is the perhaps the first first country which has implemented the provisions relating to the audit trail. So there were no global guidance as far as the audit trail provisions are concerned. We being the first. What is audit trail then? Audit trail are chronological record of changes that has been made to the data. These audit trail, so it may contain, so who has made the entry, who has edited, who has deleted, these things has to be incorporated in the audit trail. When, the date and time, and the content, what he has entered, what he has edited, or what he has deleted, everything. So if you, I show you the screenshot of one of the audit trail of one of the transactions. Suppose you have got an accounts of a company containing 2,000 transactions. So for one of the transactions, you will find this type of screenshot in the tally that will contains the user ID, date and time. User ID, this is who has entered the data, who has edited, who has deleted, and date and time. Then you will also find what he has done. Suppose in the first instance, he has edited the amount. So that amount, what was the previous amount, and that is there also in red, and the amount he has edited from 11,000 to 5500. So all this, so what he has done, that is also there. So everything will be stored in the data. Suppose now he had in the second instances somebody else has changes the narration. So that narration that will also be stored permanently. So nothing is deleted in the scenario of audit trail. Everything is there as the permanent records of the company. So that in that scenario, what is the global scenario? I had already explained that this is the India is the first country. Let us compare the cost of maintaining audit trail in case of small company, large company, and MNC. So in case of small company, say software, you would purchase a software that have the features of audit trail. So that maybe tally with this audit trail feature, maybe busy with audit trail feature, maybe for larger company SAP. So MNC is also there. So MNC, in case of MNC, you will find that only for the Indian part, the audit trail feature, the audit trail feature should be there. But it is not practical that for the Indian part, if suppose there is a one software is there, so for part of the account, it can't be, you can't maintain it with the audit trail feature. There would be a server cost. There would be the hardware cost also, and some other. There are so many other relevant ancillary costs also. In Indian scenario, maybe the people, the companies are formed just like a small partnership or firm or proprietorship firm. So the question arises whether for a small company shouldn't there be a threshold limit. So I hope that a sense will prevail. The government will think on that line, and the business organization will represent properly so that some threshold limit can come for ease of doing business in India. Yes, audit trail feature do ensure higher degree of reliance to the stakeholder to the shareholders, to the auditors, that do comes. Then what is accounting software? Accounting software is the computer program or system that enables recording, maintenance, or reporting of books of accounts and relevant ecosystem applicable to the business requirements. So the Tally, Busy, SAP, all these are accounting software. Then the question comes, is Excel an accounting software? Perhaps not, because it doesn't have the relevant ecosystem applicable to the business requirement. So that feature perhaps is not there. And recording, that perhaps is, but that this relevant ecosystem perhaps is not there. So Excel, if you're, that is not an accounting software. But then the questions come: do the Excel has audit trail feature? No, it doesn't have the audit trail feature. Books of accounts. The definition of books of accounts is very pertinent, because so what it says, that receipt and payment, money receipts and expended, all sales and purchase of goods and services by the company, that records are also books of accounts. So if you are suppose if, in case of a medium-sized company or a showroom, suppose you are having an accounting software that they are using it, they are using a Tally, that the accounting software, but sales they are entering in some other software. So the sales you are maintaining, sales are parts of books of accounts. So that software where you are maintaining the sales, that becomes the underlying software, and that should also have the feature of audit. Suppose you can place the purchase order manually, but you can also purchase with the help of the software. So that purchase order also becomes a part of the books of account. So placing the purchase order, that should also feature have the feature of audit trail. Assets and liability and the prescribed cost records are also there, are also covered. Then the questions comes: which provision of the companies contains relating to the books of accounts? Section 128 friends, what it states? It states that the company is required to maintain true and fair states of affairs of the company. The company is required to maintain books of accounts which reflects which gives a true and fair view of the state of affairs of the company. So such type of books of accounts are required to be maintained, friends. That too on accrual basis and the registered office and the branches. Then the proviso further states that where the company maintains, that the company may keep the books of accounts or other relevant paper in electronic form, and company has to follow such rule as may be prescribed. Friends, under this proviso, the accounts rules, the company accounts rule has been notified, and these rules are applicable from 1st of April, finally applicable from 1st of April 2013. So these are the basic enabling provision. So before the audit trail, you have to ensure that the company maintains proper books of accounts. That is one. So what is proper books of accounts? A proper books of accounts is one which reflects true and fair states of affairs of the company. Then the question comes whether the company is required to keep the books of accounts, proper books of accounts on daily basis. This is a relevant provision. But by going through the 128 is silent on this. Yes, ROC may take a view that you are required to prepare the books of accounts every day. But in my opinion, you may be a company which are maintaining the books of accounts in a daily basis, but a small company, your books itself will reflect you do not have such manpower. So maybe weekly or fortnightly basis, you are maintaining the books of accounts. That perhaps may satisfy based on the facts and circumstances of the case with the requirement of the section, in my opinion. However, ROC may take a strict view also, friends. Then what is the penalty of non-compliance of Section 28? Then the fine can be up to from the 50,000 to 1 lakh. So what says MD, Director Finance, CFO, or other person say GM Finance has been charged by the board with the duty of complying of this section. Then the accordingly penalty can be levied. A so-called notice can be issued by the ROC, and accordingly things can accounts rules. What it says: every company which uses accounting software for maintaining books of accounts shall use only such accounting software which has the feature of audit trail of each and every transaction, which says that audit trail should exist for each and every transaction, creating an edit log of each changes in the books of accounts along with the date, and ensuring that audit trail feature cannot be disabled. So the audit trail feature must be there, even at database level also, apart from the transaction level. But in case of very small, if you are not maintaining books of accounts in accounting software, then this provision will not apply. Suppose you are maintaining manually, so in my opinion, this provision not apply. Auditor rules. So you have to report, and you have to comment on this audit trail under Rule 11G. Then non-compliance penalty. This section 143.3 or section 143 doesn't contain any penal, direct penal provision is not there. But section 450 states that in the Companies Act, if the for any section if the penalty is not prescribed, then section 450 will be applicable. And what it says, how much is the penalty? It can be a fine of up to rupees 10,000 plus fine with a further fine of 1,000 of every day's default. Suppose inspection that has the books the there had been an inspection in the company or by ROC, say in the year 2030. So, how much the penalty the ROC can levy for, say, if they find out some wrong statement has been made to the auditor? 10,000 plus 1,000 into 365 into 7 per company. Let us take the example that it is a group company of say 30-40 companies your firm has signed. Then how much penalty can be levied? This is an old report, maybe 2-3 years back. So under section 143, we are already commenting in our opinion proper books of accounts as required by the law, as it appears from the examination of those books. So if so you have to also comment, apart from audit trail, you have to see whether the proper books of accounts are maintained or not. If in your opinion it doesn't maintain, so you have to comment that. You may refer here that subject to your comment on audit trail. You can refer that points also here. So here you are reporting Rule 11 of the company's audit. So this is the place in the audit report. So here you have to insert one para relating to the audit trail. But how you will report, what you will report, that we will see later on. Rule 11G, what it says, it requires that auditors report to state whether the company has used such accounting software for maintaining its books of accounts, which has the feature of reporting audit trail facility, and same had operated throughout the year for all transactions recorded in audit trail, and audit trail feature has not tempered and it has been preserved. I may be an auditor, maybe there could be a very senior auditor, maybe of 65 years. We are not comfortable with the software. He can take an opinion from the expert whether the audit trail feature has not been tempered, audit trail feature has been preserved or not, operated throughout the year for all the transactions. You can take the opinion from the expert. If you are not comfortable with the software, if you want to take, so there is a separate guidance note on that you can follow. Yes, from 1st April 2013, the accounts rules are applicable. So here is any software that maintains records or transactions that falls under the definition of books of accounts will be considered as accounting software. So if sales are recorded in the standalone software and only consolidated entries are recorded monthly into the software used to maintain the general ledger, the sales software should also have the feature of audit trail. This is what I had already given the example also. Suppose you are a sugar cane factory, you have the can management software. So apart from the accounting software, that can management software must also have the feature of audit trail. If you are a hospital, operation management software is there. So that software also have the feature of audit trail. But where you are maintaining books of accounts manually, what you have to report under 11G, that the company maintains books of accounts manually. This statement of fact you have to give. So, if the company uses an accounting software for maintaining the books of accounts, then what's the management's responsibility? So, you have to also ensure that audit trail feature is not disabled. There are some software where you have the option to enable or disable the audit trail feature. If such option even is there in the audit trail feature, then also you have to report. Accounting software may be hosted and maintained in India or outside India, or maybe on premises or on cloud, or subscribe to a software as a service software. So, what is the auditor's responsibility? Rule 11G requires auditor to report on audit trail by making a specific insertion in the audit report under the section report on other legal and regulatory requirement, which we had already seen, the place where we have to report. In addition to comment on whether the company is using an accounting software which has a feature of audit trail, the auditor is expected to verify the following aspects: whether audit trail feature is configurable, whether the audit trail feature was operated throughout the year, whether all the transactions recorded in the software are covered in the audit trail feature, whether audit trail feature, as per the statutory requirement for record retention, the requirement is for 8 years. So the accounts rules which were applicable from 1st of April 2023. but audit rules, it was also applicable for financiers. So last year we had already disclosed this by way of a paragraph in the audit report that it is not applicable. Yes, friends, it is applicable for all type of companies, whether it is Section 8 companies, foreign company, one-person company, any company. If you have taken a certificate of companies, then this provision audit trail feature is required. Whether the books of accounts are entirely maintained manually, so you have to disclose the fact. So in case of a CFS, the principal auditor, he has there will be so many subsidiaries. So you can rely on the work of the other auditors, the subsidiaries, the auditor of the subsidiaries, and accordingly you can report. So as far as the preservation of audit trail, the books of accounts, as per the Companies Act, are required to preserve for minimum of 8 years. So if there is a investigation before 8 years, then you have to, that can be prolonged. But the same preservation that is for the books of accounts is also for the audit trail also. So you have to preserve it for 8 years, and then if there is investigation, then it can prolong. So audit trail feature, audit trail is properly protected from any modification that has also to be ensured. So if in some of the software the date can be changed, it is the management's responsibility that these things, that how to avoid this type of things. Management have to ensure that users separate users ID are assigned to each individuals who will have the access to the data, have to the access of the accounting software, and also ensure that they are not sharing it, so that it can be rest assured that the same person who has allotted the user ID has entered or modified or deleted the data. So such type of internal control must be there, exist in the company. We had already seen this. So in case of a service organization, suppose in a Reliance, Reliance company has outsourced its payroll processing to some other organization. So what it says, in case of accounting software is supported by service providers, management auditor may consider using independent auditors report of service organization control 2, assurance report on control at service organization for compliance with the audit will require. So this is the what we had wrote in the last year's report. As provision to rule 3.1 of the company's rules 2014 is not applicable for the companies, and it is applicable only from 1st of April 2030. Reporting under this clause is not applicable. But now, how we will report this year? So this is what a clean sheet audit para we are inserting. We can insert as far as audit trail provision is concerned. Based on our examination, which includes test check, the company has used an accounting software for maintaining its books of accounts, which has the feature of audit trail facility, and same has operated throughout the year for all relevant transactions recorded in the software. Further, during the course of our audit, we didn't come across any instance of audit trail feature being tampered. Additionally, the audit trail feature has been preserved by the company as per the statutory requirement for record retention. So this is the unmodified para which we can insert in our audit report if everything is good. But if something is not good, so the same para with except for the instances below. So these are the instances we are qualifying or giving a disclaimer of opinion. So let us one by one. There are 5 instances we have illustrated that has been illustrated here. One, audit trail feature was visible for one of the books of accounts. That is, fixed asset software do not have the feature, have audit trail. Based on our examination, the company has used an accounting software for maintaining its books of accounts, which has the feature of audit trail, except in respect of maintenance of books of accounts, wherein the accounting software didn't have the feature of enabling throughout the year. Further, the audit trail facility has been operated throughout the year for all the relevant transactions recorded in the software, except for the instances below. Further, during the course of our audit, we didn't come across any instances of audit trail feature being tampered with. So the second situation, audit trail feature is not operated effectively throughout the year. So except for, we can write except for this period, this software by the company to maintain payroll didn't operate throughout the year, or to maintain the books of accounts of the company, it doesn't operate it. Accounting software is maintained by third party and auditor is unable to access. Suppose in case of a payroll that is maintained by third party, and now we are not able to maintain. So how you will report of the contravention? They are not. You are unable to access. So based on our examination, the company has used an accounting software which is operated by the third party software provider for maintaining its books of accounts, and in the absence of this, we are unable to comment whether audit trail feature of the said software was enabled and operated throughout the year for all the relevant transactions recorded in the software, or whether there were any instances of the audit trail feature being tampered with. Number 4, the audit trail has not preserved by the company as per the statutory requirement, say that is for 8 years. So that trail, the audit trail has not preserved by the company, so that this we can insert for the period for which it has not been. Now, fifth situation is migration from one software to another. So what they did, they were using say Tally, and now they have shifted to SAP, and auditor is unable to obtain the audit trail feature for the Tally, so previous software. So how we can report? The company has migrated to this software, the Tally to SAP during the year, and is the process of establishing necessary control and documentation regarding the trail, and consequently we are unable to comment on the audit trail feature of the said software. So we are reporting the contravention under Rule 11G, but we also have to see that whether the proper books of accounts are maintained or not. That 143(3)(b, while reporting this, we have to also see whether this feature impacted the proper books of accounts or not, non-maintenance, if any. Then, if you are giving any adverse remark, then 143(3)(h, IFC report in case of material misstatement. So these can be the 4 places where we have to report as far as the non-compliance or any adverse opinion, that we have to accordingly do in these 4 places. So, in case of a fraud-like situation, the auditor must have to use his professional judgment and materiality. That also will help us. you have obtained the management representation, that this type of acknowledging the management responsibility for. So a format is already there in the implementation guide as far as the management representation is concerned. But that can't be management representation. That then you have to it can't act you. The management representation can't act you to save your skin in case of non-compliance is already there, but you have not properly audited. So it is the starting point, perhaps, that what the management has written in the representation, you have to audit, you have to check, you have to sample check, and then you have to come to the conclusion, and accordingly you have to comment. In case of very small company, say the of 4-5 lakh paid up capital, or very small company, and very less transactions are there, they do not have any permanent staff, maybe how we can maintain the proper books of accounts. One of the feature is there in the tally, use effective date for voucher entry. That is perhaps no. So we have to make it yes, use effective date for vouchers. That we have to instead of no, we have to make it no. Yes. Then we will press F2. Then two dates will come. So what is happening in case of this small company, that every fortnightly one accountant will come. So what they did, they first they made this use effective date for voucher entry yes, and then if you press F2, then two dates will come, date of voucher entry and date of effective date. So if the transaction is relating to 14 days back, 10 days back, effective date you can put accordingly, and the trail, that will be the date of voucher, that will match with the date of voucher, and effective date will match with the transaction date. So this you can use as a tool for making the entry as far as for small companies in the tally is concerned, the tally software is concerned. So this link will further guide you about this entry, about how to make this entry. You can view the complete edit log. There is a video in this link. You can view it, and you can accordingly. Then there are some of the practical situations. How to audit if there are rectified or delete entries. So you have a 2,000 transactions and 600 or say 100 delete entries in the tally software or some other software. So one question arises, whether this 100 delete entries, whether they constitute your books of accounts. That the answer will always be yes. You also have to check these delete entries, because that may reflect some red flag as far as some fraud is concerned. So you have to check these delete entries also. Then the rectified entries, you find that out of the there are so many rectified entries, 1,000 rectified entries. You have to analyze why these rectified entries. So there are 1,000 edit trail of 1,000 entries that you have to see. Maybe for changing the narrations, UTR number you are getting in the evening. So UTR number you are inserting in the evening for say 200, 300 entries. So you have to analyze why rectified entries, why there is edit log of rectified entries, and accordingly you have to uh, you have to test check all these. Can company maintain books of accounts? Can company maintains partial or full books of accounts in Google spreadsheet or Excel? So, what in case of very small company, what they are doing, they are maintaining the books of accounts without inventory in the Tally software. However, they are maintaining this inventory in the Excel. So, if you go through the FAQ 25D of the ICI, the implementation guide, what it says that if it has if you are using the Excel to calculate something, so you are so with the help of the this inventory which you are maintaining in the spreadsheet or Excel, you are calculating the value of the closing stock, and then you are putting in this in the software. So this you can take a linear view, and you can now maintain this inventory in the if, in case of a very small company, if you are maintaining that can be allowed by going through 25D, FAQ 25D, we can have this view. Can company import data from Excel into the accounting software? So the last example we had seen that the sales are maintained in some different software. So what they are doing, they are then from this software they are taking the daily sales that they are exporting into the Excel, and then they are calculating it, and then they are importing into the accounting software. So that this you can do, provided, but this underlying software should also have the feature of audit trail. So before signing, there would be so many adjustment entries. Suppose you are signing on 31st July. So there will be so many entries, and you are certifying that financial statements are in agreement with the books of accounts. So you have to pass all the adjustment entries, and you have to make sure that the software, the books of accounts that are maintained in the all adjustment entry you have to pass, and then you have to you have to sign. So before signing, you must have to ensure that the accounts that has been maintained in the software are in agreement with the books of accounts. You can't do it afterwards, which you may be doing in the past. So that you have to plan. Then in case of Tally software, what you are doing, you are splitting the company. A question will arise when you should split the company, whether it is on 1st of April or after signing the report. In my opinion, you should split the company after signing of the audit trail report if it is required. Because if you are splitting the company on 1st of April, then separate audit trail for that will also do. Then if there is any changes of the past year also, some of the transactions you are maintaining, you are entering of the last year after 1st of April. So that also you have to make in that two places. So better you split after signing and everything is okay. So if it so splitting that can be done after signing report. A very interesting resolution in last year that from 1st April 2023, it was a very small company. They will maintain the books of accounts manually. So they had passed a board resolution last year. And then after 2, 3, 4 months, 6 months, they faced the difficulties. And then they again wanted to change. So they again after 6 months or 1 year, they passed a board resolution. They made a board resolution, and the board decided that they will again shift to this accounting software. So the questions comes whether this is as per law. So I didn't find any contravention uh, in that case. Can a company maintains books on manually, partially, or fully? So if you are maintaining in case of these manual books of accounts will perhaps will be a history. It will be only in case of very small company, perhaps they will maintain manually. Very small company. So if they are maintaining it, disclose the fact, that is not an issue. Or if they are maintaining, say, some fixed asset register or that or inventory register manually or petty cash on manually, that they can do, but disclose these facts as a notes or at any other proper place. How to report if the company maintains books on manually, partially, or fully? That we have already seen. That you have to disclose the fact. In case of a group company, these things are happening. That say in one software that has been purchased in the name of one company, they are maintaining the books of accounts of so many companies. So a question comes whether that this allowing the other companies to maintain the books of accounts, to keep the books of accounts in my company software, whether all these companies are generally related, they have the common directors and some other. So whether this has not become a related party transaction, so that we have to also consider. Then maybe after 1 year or 2 years, in case of scrutiny cases, the department may ask that for these transactions you also provide the audit trail. Maybe suppose in case of survey, they will first see, the investigating agency will like to see the audit trail of the transactions. And if these transactions are post dated, backdated, if such type of things happen, especially for cash transactions, whether they will accept those, the answer will always be no. Let us see the provision of the definition of fraud 447. It includes any act and omission also. It then any other person is also covered. So auditor can also be covered. And omission, you are required to do things in a particular way, but you have not audited in, you are required to audit in a particular way, but you have not done. So omission is also covered, friends. And what's the penalty? If it is amount involved in more than 10 lakh, so you see the penalty. $10 and so 10 lakh or 1% of the turnover of the company, whichever is lower, see the penalty. This is what I was referring to, FAQ 28D. So what it says, there are two parts in this FAQ 25D. First part, when you are auto feeding something into the accounting software, then the spreadsheet will attract the audit trail requirement. But when this is the case, so in user computing tool like spreadsheet may be used to record transactions or preparing working calculation of the amount to be recorded. For instances, it may be used for preparing working of the foreign exchange gain or depreciation. However, accounting entries may not get auto-posted directly to the accounting software from such spreadsheet. In such a case, spreadsheet will not be treated as part of the books of accounts and will not attract audit trail requirement. Auditors should evaluate the fact regarding the usage of end-use user computing tools and accordingly report. Friends, I am also sending the updates which are very relevant for chartered accountants. So if you want, you can WhatsApp me. I will send you the link to join the group. So with this, we can have Krishna ji, we can have questions if any.
Yeah, sure. Thank you, sir. Most of the question definitely you answered through your presentation regarding partial implementation of softwares, partially maintenance through manual accounting. One of the unique question that I got on the portal is that, for example, a company is doing bulk posting of accounting at the year end or even after the year ends, which creates a pockets of audit trails in particular period. So how does that affect the audit reports?
Friends, let us examine this question under the provisions of section 128. The only provision which under the Companies Act which speaks how to maintain the provisions relating to books of accounts. What it says, every company shall prepare and keep at its registered office books of account and other relevant books and papers and financial statements of every financial year, which gives a true and fair view of state of affairs of the company, including that of its branches and offices, if any, and explain the transaction effected both at the registered office and its branches, and such books shall be kept on accrual basis and according to the double entry system of accounting. But friends, this section doesn't say कि क्या रोज अपने को पोस्टिंग करना है कि नहीं करना है. When something is silent, ROC may take a view that you are required to keep the regular books of accounts. Now, the onus will be on you to prove that then when a so cause comes, then you can on the ground कि भाई कंपनी में resources कम है, transactions कम हैं, so we are maintaining fortnightly books of accounts, but you can't stretch to that extent that you are maintaining books of accounts only at the end of the year. You can't stretch to that extent. If you stretch the rubber to that extent, then what will happen? It will come back to you or to your client. So please don't stretch to that extent. Ask your company. Ask your company. You have taken a certificate of a corporate under the Companies Act. What you have to behave like a corporate. You are not a chana mudi wala or sole proprietorship firm which can maintain books of accounts. Now at the end you will be doing. So such interpretation, if you take or you maintain bulk posting at the end of the year, IOC may take a view that you have not maintained proper books of accounts during the year and impose the penalty what is prescribed under section 128(5), in my opinion. So please do not stretch the time to such extent, weekly or fortnightly. That I think that can be it. आप उतना तो जस्टिफाई कर पाएंगे, उससे ज्यादा जस्टिफाई नहीं कर पाएंगे. और उसके बाद तो फिर आप यदि ऐसा करेंगे तो उसके बाद वी विल आल्सो वेट क्या होता है, आरओसी का क्या व्यू रहता है, देन अपील में क्या होता है. ये एक
Sure. Thank you, sir. I think we will restrict the questions till here. On behalf of CP committee, I would like to offer a formal vote of thanks to Nitesh sir. You gave a wonderful presentation, wonderfully, and they describe all the provisions of the act governing this audit trail, and even help the auditors to how to view the provisions from their perspective instead of going through client's perspective. I'm sure attendees must have got their queries resolved pre discussion itself. Thank you, sir. I think with this, we conclude our today's webinar, where we got a unique opportunity to listen and interact with two eminent speakers with abundant background history of strong professionalism. I would like to thank the entire team of CPE committee, our technical support team, chairman and vice chairman sir of CPE committee, to permit and organize an insightful webinar today. I thank all the participants for attending till the end of the seminar and sending in their questions for open discussion. Thank you, everyone. Thank you, sir.
Thank you so much, the chairman, the Krishna ji, the secretary sir, everyone, Nisar ji and Shrey ji. Thank you so much. Thank you so much.
Thank you, sir.